Assalamu alaikum. Ladies and gentlemen, I would like to greet everyone in a lovely afternoon. It gives me immense pleasure to welcome you all at today's session, Q3 earnings disclosure of MJL Bangladesh Limited. We want to make this afternoon not only great but also knowledgeable. We appreciate you taking time off from your busy schedules to join us today. We have lined up the event for you to be fruitful and engaging. We will have a question-answer part at the end. I request the guests to be prepared with their questions after the session. You can also post your queries online to our live streaming at www.mobilebd.com. Before starting the session, I would like to request the panel members to take their seats. Mr. M. Mukul Hossain, Chief Executive Officer, MJL Bangladesh Limited. Mr. Sabbir Ahmed, FCA, Head of Finance and Planning, MJL Bangladesh Limited. Mr. S. M. Rahmatul Mujib, FCA, Senior Finance Controller, MJL Bangladesh Limited. Ms. Nagma Mahmood, Head of HR Admin and Company Secretary, MJL Bangladesh Limited. Thank you. Now, with much honor, I would like to request Mr. M. Mukul Hossain, CEO of MJL Bangladesh Limited, to deliver the opening remarks.
Assalamu alaikum, everybody. I think this is our second meet. Senior members of the MJLL, present here, the investors, representative from bank, fund managers, representative from leading browse, analysts from financial institute, journalist, my colleague, Assalamu alaikum and very good afternoon. On behalf of MJL family, I would like to thank you for your presence in this third quarter of 2017-2018 financial fiscal year earning disclosure. I believe all of you know about the MJLL. However, since I have come here in front of you, I should say some of the words. MJL being a technological driven company, we always strive for the better value passed on to the customers. We always try to be ahead of the competition, whatever it means, because we don't have anybody ahead of us to follow. So we compete with ourselves. Being an entrepreneur, MJLL now not a company, it became a conglomerate. With a strategic entrepreneurship, this company has invested strategically different companies like LPGs, cylinders, foreign going vessels, and other ventures. And we are planning to go forward with different kind of investment. For example, this company, being a very standard operating practices and value for the commitment, has earned a good reputation in the country, both to the customer end as well as the regulatory bodies. And we have awarded locally and internationally for being the good operator. As an example, we have received multiple awards from ExxonMobil, regulatory bodies, financial institution, and good remarks from our customer. Now, in this year, actually we made some very substantial investment in the land. Like recently, we acquired 53 bighas of land valued 97 crore on the bank of the river Shitalokha. And the land is so strategic, the draft is 6 to 8 points. So it's a very good piece of land to go forward with some of our new projects. We have invested 133 crore taka in a FC vessel of 100,000 metric ton, which is named MT Omega Legacy, and already started earning the money. We have engaged that ship in different cargoes to carry. We have invested almost 78 crore taka to our subsidiary company OPL for the capacity build-up of this company. The growth rate of OPL is so high. Like we started with a 70,000 metric ton, now we are handling almost double. And we are expecting the exponential growth of the OPL. So to substantiate that growth, we must build up our capacity. We have invested some of the MJLL core business logistical side. We have introduced different kind of logistical mode to support our customer to transport goods. Previously, we have started 20,000 liter bulk supply to our customer. Then we started 1,000 liter IBC supply. Now recently, we bought the multi-compartmental tank so that we can really support to our customers with the different mode of transport as suited by the customers. And this all because we want to enlarge our market share as well as to support the customer as a value addition so that competition cannot really compete with us. So this entrepreneurship actually is going on. Like our corporate house in Chittagong already been completed. It's a 10-story building. We are investing in our corporate house, central corporate, main corporate house in Dhaka Gulshan Avenue, right beside the Standard Chartered. And this is one of the class. We are really going for the LEED certification of the platinum. We are trying for that, and we were hopeful to get it. So what I am actually trying to establish here, that MJLL being a conglomerate is a technological driven company. The company which is making investment in strategic location where the competition cannot really catch up or cannot just straight away put a fund and make this kind of company. So we eventually over the years will grow. That's our expectation, and we strongly believe for that. However, on your busy schedule, all of you came here in this program to value addition of our MJLL thing to pass on to the customers and the other bodies who actually is not aware. On our opinion, our MJLL shares should be more justifiable. It's not really valued. So with the request to you to put forward the right information to the customer base and do a justice to us. Thank you very much.
Thank you so much, Mr. Mukul Hussain. Now, let us welcome Mr. S.M. Rahmatul Mujib, Senior Finance Controller, MJL Bangladesh Limited, to make his financial presentation.
Thank you and welcome everyone for this financial performance disclosure event. We have prepared the presentation in two ways. That is, in first part I will cover quarterly performance of the company, and last part I will cover the year-to-date performance of the company. And in each part I am showing to cover MJL solo as well as consolidation. This is forward-looking statement, as you already know. Quarterly performance of consolidation, I am covering quarterly base first. Under gross profit, we have already achieved 1.3 billion gross profit in this quarter. Consolidated gross profit, which is 30% margin, from margin of 30%. And in terms of EBITDA, we have earned 31%, that is 1.36 billion. And the bottom line, net profit after tax, we have achieved 68 crores net profit after tax, which is 15%. I would say this is a significant growth. If I say this is the combination of workforce, they are really drive to achieve this. In the next slide, we have prepared the slide in segment-wise, that is last 5 quarters we are comparing here. If I say, if I view the presentation, that is our growth is significant, because if I compare with quarter 3 2016-17, our growth is almost 3.74% CAGR. In terms of number, we have achieved already 783 million revenue this quarter compared to last quarter of third quarter of 2016-17. Gross profit, we have earned 130 crore gross profit in this quarter, but in comparison that was 100 crore in Q3 2016-17. That is 30% growth, 30% profit margin in our in this quarter we have achieved. We have also prepared analysis of EBITDA. In EBITDA, we have earned 136 crore of EBITDA margin, which is 30 EBITDA added to returning, that is 31% of our sales. But when we are comparing that in Q3 2016-17, that was 109 crore. If you see that last quarter, couple of quarter, our EBITDA is increasing, as well as our profitability is increasing, and our revenue is also increasing. In the operating profit line, we have added 105 crores profit, BDT, in this quarter, but at the comparison, we have added only 90 crores. That was in Q3 2016-17. There is a significant growth, I would say. In the bottom line, though market is challenging, our salespeople has given huge drive also to boost up the sales, as well as we have given a huge drive to minimize our cost and other component. This is our efficiency, I would say. For this reason, we have earned 68 crores profit in this quarter, which is added to our return earnings. But compared to 16-17, that was only 59 crores. And also we are expecting this will continue in the last quarter, which is the last quarter of this year. In terms of EPS, our consolidated EPS for this quarter was 2.13, but that was in 1.96, and you have already seen that the growth is significant and visible to all. Now I'm focusing on the MJL solo part, which is consisting of our trading, manufacturing, and world technical business. And in this regard, we have earned 88.88 billion gross profit in this quarter. EBITDA, we have earned 84 crore EBITDA. And lastly, if I cover net profit after tax, that is 58 crore. Net profit, that is 27% of our sales. I'm going to compare in 5 quarters, then it will highly appreciated by all of us that this is a significant growth in this quarter. In the last quarter, we have, in the earning disclosure, we have shown you that our profitability and revenue is down due to dry dock and other things, but we have already covered up this quarter. In this quarter, we have earned revenue 240 crores, which is 12% growth considering the previous quarter. In the quarter 3, 2016-17, our revenue was 243 crore. Now it is 240 crore. Slightly decreased, but due to, compared to last 3 quarters, this is upward, huge upward. But in terms of gross profit, we are apple to apple same in Q3 2016 and 17 and Q3 2017-18. But considering the last 3 quarters, we have gained huge gross profit, and our gross profit margin is 41%. EBITDA margin, we have earned EBITDA 40% compared to our sales in this quarter, and also the last quarter this EBITDA was only 22%. So we have significantly drive on our cost and other side to minimize the cost through efficiency, and also we have increased our revenue. In operating profit, we have added 76 crore in this quarter, and compared with last quarter, Q3 2016-17, that was only 74 crore. That is, we have achieved 2 crores in this quarter compared to this, and last 3 quarters we have achieved more. In the bottom line, that is that profit after tax, we have earned 58 crores in this quarter, which added to our return earning, and that compared to Q3 2016-17, that was same. But Q3, last 3 quarters, this profitability was down due to cost increase and other component of cost and increase, and revenue was decreased. That's why our profit in this quarter is significantly good. In earning per share, we have earned 1.90 earning per share, and previously it was 1.92, slightly decreased compared to Q3 2016-17, but this has been an increase in compared to last 3 quarters, and expecting this will increase in a good way, that after this year we will get a better benefit. Now the next slide, I am trying to show your quarterly average, that is last 4 quarter average. We know that since this is consolidated company, OPL and OCL is contributing. In our total revenue, 46% is contributing by MJL's revenue, and 50% contributing OPL. This is good sign for us because OPL revenue is increasing, and expecting our revenues bottom line will be increased in the upcoming quarter. And OCL are contributing 4% in the revenue bucket. If I analyze through gross profit, our 61% gross profit is MJL. MJL's sales is giving huge gross profit compared to OPL. But expecting OPL profit will be increased due to covering the fixed cost and other thing. In OPL contributing 37% of gross profit, total consolidated gross profit 37%, and OCL contributing 2%. In the operating profit, MJL contributing 62%, and OPL contributing 37%, and OCL contributing 1%. If I go through the EBITDA, MJL is contributing 54%, whereas 44% by OPL and 2% by OCL. Though OCL is smalling, but expecting this will also include our profitability, consolidated profitability. In the last part, profit after tax, OCL is contributing 1%, OPL contributing 21%. As I said earlier, the OPL giving better margin, MJL giving better margin, so that MJL contributing 78%. This is overall last 4 quarter average I'm now focusing the segment of MJLBL. I have told earlier that in our MJLBL revenue component is trading, manufacturing, and oil tanker. In our revenue line, 10% revenue contributed by oil tanker, and manufacturing 47%, trading 43%, based on last 4-quarter average. Under revenue, oil tanker is giving 10%, I already told. In gross profit, oil tanker is giving 13% margin, and manufacturing giving 55% margin, and rest 32% margin giving by trading business. From trading business, we are earning the rest amount. But profit before tax, oil tanker is giving 13%, that is a significant amount, and manufacturing giving 57%, and rest part 30% gross profit before tax giving by trading unit. This is segmental component also. We have covered quarterly basis, gross revenue, gross profit, and profit before tax. We have compared here to show the profitability growth, to show the trend of the profit and trend of the revenue. Here it looks that our all trends are going upward. That is good sign for us. Now I am in last part of my presentation, that is year-to-date analysis. In year-to-date analysis, gross profit, we have earned 3.47 billion, which is 27% of our 9-month revenue. This is, I am telling consolidation. MJL part I will cover later. In EBITDA, 27% EBITDA we have earned, that is 3.49 billion. And net profit after tax, that is 1.71 billion, which is 13% of our sales. If I say last 3 same component 9 months, that is 9 months of 17-18, 9 months of 16-17, and 9 months of 15-17, we can easily show that our revenue trade is upward. Significantly upward. That was 7.8 billion, and now it is 13.65 billion. That is significant growth. Gross profit, we have earned 3.46 billion gross profit in this 9 months, and last 9 months, that was previously this was 2.16 billion. Bottom line, net profit after tax, we have earned 1.70 billion, 71 billion in this 9 months. That is also growth is visible here. EPS, we have earned 5.12 EPS in this 9 months. 3.64 that was compared in 15-16, and 5.11 that was last year. Now this is solo part, that is we are covering manufacturing, trading, and oil tanker. We have earned gross profit 1.98 billion, that is 33%. Our GP margin is 33%, and our EBITDA margin is 30%, and our net profit after tax margin is 21%. Well, that is 1.26 billion net profit we have added in our retained profit. Gross revenue, we are, though last year revenue was very good because of, as you know, in the last quarter there was dry dock in our ship. You have already informed in last earning disclosure, so that's impact include here in 17-18. But we're expecting in 2 ships are running right now, so that our revenue is now 6.7 billion, and our gross profit is 1.97 billion in this 9 months. If I compare net profit after tax, that is added 1.26 billion, and last year that was 1.47 billion, that was slightly higher than this 9 months. And before that 9 months, 1.18 billion was net profit after tax. My last slide, that is EPS, we have earned 4.19 EPS. Last year YTD was 4.90, and before last year that was 3.93. We're expecting a good result in the upcoming future. Thank you, everyone. Thank you.
Thank you so much, Mr. Rahmatul Mujib, for updating us about quarter end performance. I would like to invite Mr. Sabbir Ahmed, Head of Finance and Planning, to deliver his speech about company's financial performance.
Very good afternoon, ladies and gentlemen. Investors, fund managers, analysts, brokers, journalists, and ladies and gentlemen, I'm here to highlight some financial salient features. My colleague Mujib has already given the financial data. Now I felt that I need to summarize all these. The third quarter, ended 31st March 2018, was a very good quarter for MJLBL and its subsidiaries. The group earned a hefty 67.8 crore profit that pulled up our earning per share to Taka 5.12 at the end of March. We are expecting the same trend in the current quarter also. During this period, the company invested 128.3 crore taka in its expansionary scopes. The consolidated net revenue surged by 21.59% to taka 438.5 crore. Comparing quarter 3 of the last year. Gross profit was also recorded 130 crore. GP increased by 28% from last quarter. And the GP margin stood at 29.68%. Our net profit after tax also increased in amount, and it was 28% from 28.12% from quarter 2. MJL alone earned a net revenue of taka 213 crore during quarter 3 of the year, which was 13.48% higher than the same period of the last financial year. Gross profit of the company was taka 87.8 crore, which was 41% higher. Our cost of revenue has reduced by 8%, which is a very significant thing. Our management has worked so meticulously that they were able to calm down the cost of revenue. Administrative and selling expenses have also been reduced by a significant percent. All this reduction was caused due to all this reduction indicated efficiency in our management. OCL, Omela Cylinders Limited, has had a remarkable quarter. They earned 44% more revenue and 44% from last quarter and 400 from the same period of last year, meaning their production capacity increased a lot and they are also utilized their capacity diligently. Gross profit of the company increased by 197%. They have also reduced their cost of sales by 7%. OPL, our LPG company, they had a dull quarter during the last 3 months in terms of value, but not in terms of volume. They maintained the same level of volume, because of the reduction in prices, the sales figure has reduced slightly. However, they have earned 43% more sales comparing the same period in the last year. In the quarter 3, we had to absorb a hefty amount of deferred tax because of addition of our new oil tanker named MT Omega. And you know, because of the differences in tax rates of the government authorities and our conservative accounting depreciation rate, we had to account it for about taka 10 crore in deferred taxes. We had to absorb that amount. Revenue of our oil tankers increased by 406% during last quarter. It's a big figure. This big jump caused because of two major reasons. One is that we have added a new tanker, and our old one, the Omega Queen resumed its operation after 2 months in dry docking. I've already told you about EPS. It had it had jumped to 5.2 taka, and during last quarter only, it added 2.13 taka. During the last quarter, MJLBL invested 27.7 crore in capital expenditures, excluding 20 crore in 53 Viga labs that our CEO informed you earlier, and excluding 2.1 crore in construction of mobile house in Gulshan. We have also invested taka 78.5 crore in right shares of Omega Petroleums Limited. Maintaining these 128.3 crore investment, our borrowing figure has not increased. It has increased slightly by only taka 5 crore, meaning we have financed all these investments from generating cash from our own sources. And you know, during last quarter, we had experienced volatile banking sector that increased our cost of financing. The quarter has also experienced increase in raw material prices, our raw material prices in the international market. We have also experienced foreign currency depreciation. It was about 6%. That's a significant figure. We had to absorb all these shocks. Still, we maintain a very good profitability across our companies. This is a testimony of our people. They had maintained it. I would like to take this opportunity to thank my colleagues from sales, production, R&D, HR, company secretariat, and of course, my team from finance and planning. I would also like to thank you very much. Thank you for coming and joining us in this session. Thank you very much.
Thank you so much, Mr. Sabbir Ahmed. Now, we will start the question and answer session. If anyone has any questions, our panel would be pleased to answer them. You can also post your queries online to our live streaming at www.mobilebd.com.
Ji, Assalamu alaikum. I'm Tipu Sultan from Sheltec Brokerage. I'd like to thank you for this beautiful presentation. One thing I'd like to request you, all of you, to MJL, as OPL is contributing a big portion of your revenue, profitability everywhere, in every aspect, I would request you to represent the financials of specifically OPL as well, because you have already shown 44%, 50% of the revenue is been generated from OPL. So if you kindly disclose those informations, that would be very helpful for us. Next question I have is, what is your current storage capacity of tanker, MJL vessels?
Thank you. Thank you very much. Your first part was for making a separate presentation for OPL. We were also thinking that we will do it from the next presentation. And we are also wanted to know about our capacity in our oil tankers. Yes, it is 107. They do it. Some 107,000 metric ton for our Omera Legacy, the new one, and our old one is Omera Queen, which is capacity is 106,000 metric ton.
To add that, actually both the ships are in a similar size. It's a Panamax. It's called the Panamax class. So the 1,000 metric ton difference is the while making the ship, is a similar kind of, and we are the highest tonnage holder in Bangladesh.
In addition to that,
BSC even.
In addition to that, I would also want to know the storage capacity of your OPL. We know that your distribution capacity is around 3,600 metric ton.
OPL storage capacity.
Let me handle this. OPL capacity last year was the 5,000 metric ton. We could handle 100,000 metric ton of LPG. But this year we have built up our capacity to double, and we can hopefully handle 200,000 metric ton of LPG per year.
Thank you. On aspects, basically we know that Beximco has the highest capacity, distribution capacity. So what are you, as you are just being giving them the biggest competition, you have 3,600 metric ton of distribution capacity. How much are you looking forward to compete with them, with your distribution channel and your distribution capacity?
No, I think there is a confusion here. Our capacity was, when we started it, it was a close to 5,000 metric ton, because you are considering only the MI, main installation. Because simultaneously we have started operation of our these 3 satellite stations in Bogura, Gorashal, and the Mireshorai. So capacity actually is whole is the 5,000. Now we made another 2 spares, which is 1,800 metric ton per spare, which is 3,600 additional, plus we have installed bullet in different satellite stations. So it makes us actually our capacity build up to double, almost.
Okay, on a different context, from your assets, you have a portion called FD, foreign fixed deposits. We have seen in your financials, we have seen there is withdrawal of your fixed deposits, about 30 crore from DBH. So
yes, thank you very much. Those fixed deposits were matured. We have encashed only those fixed deposits which has matured, and you already have known that we have invested a lot, about 128.3 crore during last quarter for different projects, including purchasing of right shares of OPL. That was the reason.
Thank you. I think that's it. Thank you.
Thank you very much.
Thank you so much. Next question, please.
We are expecting some questions so that we can explain ourselves better way, so that we can actually really communicate with our stakeholders.
I think all right, is it working? Yes, my first question is, first of all, I'd like to reiterate the same request that if someone were to ask me to analyze this company, I'd probably be in a little trouble because it is very difficult to analyze MJL without analyzing Omera. We actually do need the financial statements of Omera every quarter. And on top of that, if I'd like to add a little more, so right now the playfield is getting very competitive and there are new companies coming in. So what are the advantages your product has other than price to compete with competitors? Say if they were to reduce the price to unsustainable level. Thank you.
Actually, let me address this one. OPL, handling the LPG. LPG is a generic product. Some of the bigger competitor, who is the actual biggest, the Boshundara, we are close by to them. We are next to them, second. But remember, Boshundara started operating 18 years before. We are just a child, only 2.5 years. But we are progressing in such a way that we are heading towards crossing the Boshundara by, I think, next year end. What actually generic product, is a LPG. Nobody asks a mess lighter when they burn, whether it is burned or not. Nobody look at the brand, But we are trying to create a differentiation by our services, our safety features, our customer calls reputation, so that you see that you go to the any interior of Bangladesh, Omera, LPG names are very familiar. So our sales also progressive. Since a generic nature, we need sometimes to establish ourselves as a standard operator with the customer safety and the services.
Adding with our CEO, for LPG sector, we have one barge. For distribution, to increase our distribution channel, we have one barge that is 300 metric ton capacity. We have already added another one, and another one is going to be added. That is another barge is adding. That is capacity is 350,000 metric ton each. So that by adding the distribution, stronger the distribution channel, we will cover our competitor and we'll cover up and we'll go, to become the first. Thank you.
One more thing, in OPL, our main installation, we have 22 acres of land. We only utilize 8 acres. Sufficient land is there to build up the capacity as on the progressive sales. Now, on the distribution segment, you just asked a question. We are making a distribution channel, educating our distributors, not only sell and get the margin, rather they are also trained by us to support our customer on the technical side also. And our sales representative, we hired a great deal of engineers and station it in different high strategic location of the higher seller segment to support the customer base, to make them understand what is the difference. Like some of our operator using the cylinders, which is not really safe, So the LPG is supposed to be a safe medium of the fuel, Though safety is our concern.
Thank you, sir. Thank you so much. Next question, please.
I'm Sakib Chaudhary from Brachypel Stock Brokerage Limited. You just mentioned that you have purchased a land of 53 bighas around Shitolokha River. What's the purpose of this land and what's the project basically?
You see, Bangladesh is a very highly populated country, Biggest challenge for any entrepreneurship is a strategic land. We have a lot of things in our mind which we cannot really disclose. But see, if we have a land in a strategic location, we can really build up a technological driven new venture over there to capitalize the market. But if we do not have the land, whatever in our mind, you know, like say suppose we just bought a land of 53 bigha right beside the Karnofuli river where the 6 to 8 meters draft is there. Can you imagine? We can really install or build up 2 bigger industry with a riverine support. So that will give us the leading edge over the competition. So we are not buying the land for the sake of buying land. We have got something in our mind, and accordingly we are buying the land in the strategic location. Okay? But unfortunately, I cannot really disclose what we are going to in time when we really go for it, because it's a, all you know, it's a listed company. I cannot really just, you know.
Okay, you have also mentioned that you have purchased some shares from OPL of around 78 crore BDT. Now, what percentage of OPL MJL owns at present, and what percentage of other stakeholders
62%,
own?
Yeah, MJL holds 62% of OPL shares, and the percentage remains same after new acquisition, new purchase of the shares.
All the other shareholders purchased similar amount?
According to their proportion.
Proportion of shares.
Proportionate, because we have got a 2 foreign investor here, FMO,
BB
FMO
Energy.
and the BB Energy.
Energy, okay.
So in the board meeting, actually we placed our this expansion plan of right share, you know, right share, and we have given them the option. Either you go for it or MJL is going to invest, because we know where we were driving. Immediately they just agreed to get their share.
Another question, sir. You mentioned that Omega cylinders revenue have jumped up a lot during this quarter. Now, what percentage of your cylinders of Omega Petroleum comes from Omega cylinder right now? And is it more costly compared to imported cylinders, or less costly?
You see, when we really install our Omega Cylinders Limited, you know, the growth we are expecting, when we install the thing with a 1,000 cylinder per day, is nothing compared to our sales. So we are actually building the capacity building over there, you know, those cylinders. And obviously, the cylinder manufacturing is cost effective than importing. Okay? And on the other thing, nevertheless, technological transfer to Bangladesh is a quality industry is needed. So we have done it. It's a heavy industry.
Can you give us any estimation, right? What percentage of margin expansion you can attain if you go fully over, if you depend fully on Omega cylinder? Is there any estimation from you?
So we are actually doubling our cylinder capacity to make like 1,000 to 2,000. But compared to the OPL itself and the MJLL, the revenue earning won't be there. You consider a cylinder 2,000 air and average 2,000 taka per cylinder. If you manufacture 1,000 cylinder, how much it comes? So compared to the investment size, you know, that really is not going to contribute much. But what is a solid thing, it will be giving to the MJLL, because MJLL owned the majority share, I think 99%. 98% of the Omega cylinder, plus supply assurance to our OPL. You know, we have our own plan making the cylinders, streamline supplying to the OPL, so that in no question of shortage of the cylinder.
Thank you so much. Thank you.
I'm sorry, I have a bit more to add. On 23rd April, there was a news on Deal Street Asia that IFC is planning to invest 20 million in Omega Petroleum. What is the progress in that? And second question, by way of cross-holding, how much does MJL hold in Omega Gas 1? Thank you.
To respond to your first question, so IFC, the news came in the media is from IFC website. It is not from our side. And according to the arrangement with IFC, we are not, right this moment, we are not to disclose the deal. But you can wait for a few more days. We'll disclose it accordingly at an appropriate time.
And your next question, Omera Gas One. Omera Gas One is the joint venture company of the OPL, not the MJLL. Not the MJLL. And it's a 50-50 joint venture with the Saisan company of Japan, who are the largest LPG distributor in Japan. So actually it's not the MJLL. MJLL subsidiary is the OPL. OPL subsidiary, a joint venture company, is a Omera Gas One. Okay.
Next question, please.
Good afternoon. This is Toroy Kumar Roy from IDLC Securities Limited. I have a couple of questions. First question is that you mentioned that since the currency depreciated, so the cost of importing materials is going up. So do you have a pricing policy so that you can pass it on to your consumers for both LPG and lubricant business?
We have already increases prices of few of our products, and the impact of foreign currency depreciation has not impacted in a full manner, because many of these inventories are in our inventory. So it will impact gradually, and considering the cost and the market scenario, we will decide our price in future also.
Thank you.
Well, to add your questions, actually definitely, when the cost of goods become higher or gradually increasing, you have to adjust your pricing. But the way the dollar rate is changing, I mean, in the last 3-4 months, it was exponential. So, but if you try to throw those changes to the market, is really, situation can be, market reaction could be different, but we are working on it so that our margins really does not affect on the changes. We have increased some of the product price, which is very much closer to our cost, and gradually we are going to do that. On the other hand, we are taking some of the precautionary measures to actually reduce our different kind of cost from the LC side, from our parent companies, and some of the measures we are taking so that our operating cost reduces. So both of them can compensate and can keep our earnings as it is. Okay.
Thank you, sir. What I have seen that the LPG market is growing and so is your sales. But during 2.5 years of business, have you experienced any seasonality in LPG consumption in a particular quarter or in a particular month?
I'm sorry, I could not really get your question.
Well, is there any seasonality in LPG business? For example, the consumption of LPG spikes up in a particular quarter or in a particular month, or is usually low in a particular quarter?
Well, you see, the Piaggio making season is coming. That's the biggest season LPG sold for the all companies. We are really expecting the sales by 30% growth in the Ramadan season. And that's the season. And on the other hand, the rainy season also increase the sales in the interior side, interior, I mean the village side, because people cannot go out, their kitchen is, separate from their house, so they use the LPG. On the other hand, in the city side, the street restaurants, they have a very deep of sales. So it's become a real bit complex, but Ramadan definitely is going to increase.
One more question about your tax. You say that the deferred tax has been very high this quarters. That's why it affected profitability. But what I've observed that the current tax has also gone down. Has there been any particular reason why the current tax is lower?
Not particular reason, but actually what happens when deferred tax and current tax has a converse relationship. Whenever the deferred tax increases, it has impact on current tax also, because when we charge the cost, depreciation, particularly the depreciation, it has impact on the current tax. At the same time, the depreciation is increasing our deferred tax. So it has a converse relationship. You can check it.
Thank you.
Thank you very much.
Just to adding with you, if you compare the quarterly analysis, that our profit sales has been increased and also profit increase. But if I see the current tax is similarly same. If I go to Q2 2017-18, our current tax was 11 crore. But in this quarter, that was 10.4 crore, but decreased, not increased highly. And also not decrease, because it depends on profitability and other side. So that if I compare last 4 quarter, our tax is almost same, near about 2 or 5 crores ups and down.
Yes, please.
Last 2 questions.
Hello, thank you very much for the presentation. I have a very nice question because I have not looked into the company in a while. While looking at the earnings in the last 5 quarters, we saw a U-trend. So definitely Q3 was a fantastic performance. The EPS was about 2 taka, but if you look at the last 3-4 quarters, it was down. So my question is, what you guys did right in Q3 that you did wrong in the last 4 quarters? What happened? Because I have not looked into the balance sheet or the performance. Just knife question, basically.
You are asking very strategic question of our strategy. Do you want me to disclose that one?
Basically past performance.
No, actually what happened, we always monitoring our sales and the margins, and we try to analyze what actually went wrong. And strategically, we take the measures to cover up those things, and we learn from our mistakes. On the other hand, like say suppose cost of good is increased, so we adjusted some of the price. That also boost up our margin. That's how. And on the other hand, like last quarter, compared to the last quarter, we have made better sales in this quarter. So that's also actually contributed. Okay, that's give you answer of the question.
Not really.
I cannot really discuss our strategies. Those part actually is a operators strategies.
Oh, okay.
Just adding that in solo part, I have mentioned in my presentation that is last 2 quarter that is impacted for dry dock. If you see that if you have compared that oil tanker revenue, if you see oil tanker giving a huge margin to us, so that due to efficiently managing the ship freight, so oil tanker giving is huge margin, and last 2 quarter this was impacted due to dry dock, pre-dry dock and dry dock. Now from onward, we are selling 2 vessels on board, and we are getting revenues higher. In manufacturing and trading concern, if revenue higher and profit and revenue percentage and oil tanker revenue and profit percentage higher change, not similar. So that by adding the revenue from oil tanker, this has impacted directly to the PAT, and also as our CEO told that we have efficiently managed our expenditure and we have reduced the cost where we can give emphasize. So by this way we have added a huge profit in our bottom line.
To add his comments, let me explain a little bit of dry dock. A size of ship 107,000 metric ton, when it goes to the dry dock, it takes 1.5 months and it spends $2.5 million. One way it spends $2.5 million. On the other hand, there is no earning for the 1.5 months to 2 months. So that's actually deep last year's.
So you mean to say this can happen again?
No, it's a cycle. Every 2.5 years, you have to do the dry dock. Otherwise, you can run ship. This is the regulatory body. IMO regulations is that you have to do it. Otherwise, you are not allowed to sell the ship.
All right. Thank you.
Thank you. Do we have any more questions?
Probably last question.
Last one.
Hello, Tariq Ibrahim from UCB Capital Management. What is the investment size in the tankers? Can you elaborate after depreciation? Because I cannot see, I just see that there is roughly about 1800 crore taka worth of assets in your balance sheet, but there is no disclosure how much is invested in the
Actually,
tankers.
it had a disclosure in the last quarter.
Yes.
To answer your question, it was 15.8 million US dollar for purchasing the new vessels.
The new vessel or including the older one?
No, it's only the new vessel.
So it's roughly 120 crore taka.
Roughly 130. In total, it is 134.
134. So for two vessels, it's about 230 crore taka.
The other one purchased earlier, a few years back.
That
I'm just
And
getting an estimation.
it is it's paid off, and nearly depreciation has almost charged. So a few are only remaining.
So I have been seeing that the pre-tax operating income from the vessels is roughly about 8 crore taka, right, in this quarter, if I'm not wrong.
Sorry, again please.
The pre-tax operating income from the vessels,
Okay.
the petroleum tankers, that I see is about 8 crore taka.
I'm clearing you. In this quarter, we have earned 16.9 crore from world tanker, profit before tax, because tax is totally we are allocating, and if it is compared to Q2, that was 7 crore negative. In this quarter, that is 16.9.
So 16.9 is. Did the tankers run in full capacity utilization? I mean,
Yes,
during this
actually
quarter?
this is freight-based income, so that you cannot tell that today freight complete, tomorrow it will start. It is based on charter. This.
Let me explain, ships is carry the cargo, carry the cargo. We are trying to, we hope we could have 100% utilization, which is not possible, Like once a ship is discharged cargo in Chittagong, next loading maybe the Fujairah in Arab, You have to go to your lake and on there, then only load the cargo and deliver to the other places. So 100% utilization of a vessel is impossible. But we are optimizing our usage of the vehicle, of the vessel to carry the cargo, It's not only carry the cargo, you have to choose where the freight margin is good. You cannot really carry a cargo where the margin is very slim. So those are the adjustment we have to do, So obviously, since we have one vessel, now it's two. So obviously, the impact of the earning will be much more higher than when we are one vessel, On the other hand, the older vessel is getting older, So in one point, you have to laid up that ship. So who is going to actually replace that places? So that's why far before that goes to the laid off, we have purchased another ship so that we can really earn together, as well as when the other ship is going to be laid off, that we can really replace with the other fellow. And a ship, vessel, like when laid off, it has a great deal of value, almost 7 million, $7 million. It's a scrap value.
Basically, the question I'm trying to reach is that, do you do any kind of the capital budgeting for these projects before taking these projects? Like, do you calculate the internal rate of return for these projects, or the NPV it takes for these projects? Because what I'm seeing from this statement, the profit before tax is 8.3 crore taka. In the Mobile Jamuna Bangladesh, MJL Bangladesh unedited statement of profit and loss, other comprehensive income in that statement, if you look into that statement. So if I consider it as a regular income, so you earn roughly about 32 crore taka. You are supposed to earn roughly about 32 crore taka if this utilization rate continues. So the return on equity on this project will be about what 12 to 13%. So is it matching according to your expecting ROE levels? And
I'm not sure where you are finding this 8 crore figure. So it is our earning before, our gross profit was 17 crore, and in the last quarter we lost 7 crore. Okay, 7 crore profit before tax.
in the 6th page of the
In
statement
9
declaration.
months, you are talking about in 9 months. Okay. It has a deep, as our CEO told you earlier, that dry docking has an impact in both ways. In one way, it is reducing revenue. In the other way, it has a huge cost. So these has impacted in this year. And as you know, being a very good corporate government, we have always made necessary analysis for any capital investment. Okay. So as this year had a dry docking, it reduces our profitability.
So if we exclude that one of 7 crore taka loss, we add back to this 8 crore taka, that would be roughly about 15 to 16 crore taka. So that would be about 20 crore taka by the year end. If we exclude the one of 7 crore taka, we consider it as a one-off event. So return on equity actually is roughly about 9 to 10%. Am I right?
In an investment, you should look the investment from its lifetime span, not only from quarter or yearly point of view. So in order to have that, we need to sit together and calculate, we can calculate from its beginning to date. Okay. So it is, this calculation I think is not possible in this fora. We can have it separately.
So the assumption is that considering other factors, the return on equity and the project valuation will be much better according to your estimate?
Of course, we always do that.
Okay. And the second and the last question is that, if I'm not wrong, Mobile Jamuna has invested heavily on several land properties, including the land properties in the prime areas of Dhaka city. From my personal view, it's only my personal view, is that the investors value most about Mobile Jamuna is that its market share, formidable market share in the lubricant business, and the large margins in the lubricant business, and significant cash flow generation ability and ROE in the lubricant business. So being a power sector, the energy sector company, why is Mobile Jamuna looking into investing in land properties so significantly? What is the plan regarding this? Thank you.
Okay, our CEO will respond it.
See, lubricant business has a certain level of growth, you know, and every day competition is coming up. Why the competition is coming up? Say suppose previously, if you consider 2 years earlier, there were only 20 to 25 operators were with their lubricants. Now you go to the market, you stand a 10 or 15 shop, you will find over 100 brand. Because of our regularity problems, which I hope, we hope, strongly believe that our government is going to rectify that one, because a lot of these operator actually doing the under invoicing, so the actual price been hidden, and they are importing to evade the taxes and VAT. That's why they are becoming a competitor in the market, and they become a straightaway trader just to earn the money, you know. So with the limitations of the growth, because only 2.5% is the growth of the lubricating business. So if we grow at par 2.5%, we are not really happy with the growth of the company. So you have to have a new growth in the new ventures. With our earnings, must put in somewhere where this investment is values for it. On the other hand, we do not, MJLL do not stand on only on the lubricants. It really wants to be a conglomerate in the energy and the power segment. I mean petroleum specialized segment. So we have in our mind that some of the entrepreneurship we must do and grow in a different sector, because 2.5% we are not really happy about. Okay? Thank you very much. I believe we should be closing over here. It's a Maghrib prayer coming.
Thank you so much. Thank you for your queries. Thank you very much for your active participation in this session. Ladies and gentlemen, here we come to the end of our today's session. I would like to thank you all of you for your kind presence and attention. Thanks for coming to our event. Ladies and gentlemen, I request you all for joining the high tea. I hope you enjoyed the program. Have a safe trip back home. Thank you.